Hello, welcome to the Nigerian Investors Podcast, the unofficial podcast that tracks and reports on the activities of the Nigerian boss. My name is Moody, and with my colleague Aye, we will be hosting this podcast. TNI Podcast is dedicated to stimulating a renewed enthusiasm among the general population with regard to the activities of the Nigerian Stock Exchange. Ultimately, the goal of TNI is to see that many Nigerians from all walks of life, both at home and in the diasporas, become active participants on the floor of the Nigerian Stock Exchange. Before we go further, we would like to place on record, TNI Podcast is solely for educational purposes and not a replacement for professional financial advice. Let's begin. Hello, welcome back to the Nigerian Investors Podcast, TNI for short. In today's episode, we're going to continue with pharmacist Olatayo Nabole's interview. Sit back, relax, listen, and enjoy this episode. What advice do you have for new investors, people that are thinking about coming into the stock market, having at the back of your mind that the majority of the public in Nigeria, they are very distrustful of the stock market? What would be your advice to these new people that are trying to get into the stock market?
Yes, the beauty of it is this. The stock market is actually the best wonderful means of duplicating money. But I won't tell anybody any light about that. Just understand that the stock market has its ups and downs. Because whatever you're going in for, they have their ups and downs. The stock market is very, very viable to help you to develop your money. Even if you don't have any knowledge about all these numbers we're talking about, what you should do, it is simple. Look at the tested and trusted stocks. Even if you cannot understand their book, there are stocks that you can just go for. Don't put in all your capital. You know, your white people will say one thing that little by little. You go in tranches. You have interest. Do it with bits. And as time goes on, you will learn. I always tell people that are close to me, I said, assuming you enter into a particular room now, and in that room, there are a lot of treasures there. But as you enter the room, there was no light. There was darkness. Now, will you rush out? If you rush out, you are missing a lot. If you stay there in the next 5-10 minutes, the science of accommodation of your eyepiece tells you that you will begin to see even in the midst of darkness, little by little, and you will begin to navigate your way. It's a wonderful market. The stock market, check out anybody who has been able to go into stock market and make money. They will tell you it's not easy. But as long as you stay in there, you understand the trend, understand the principle, understand the process, and begin to take some key things into practice before you take a step, you will never miss it. People are skeptical. We've had a lot of problems in stock market. I've been there. I was there when there was all these problems of many banks, Oceanic Bank, Intercontinental. Right now, the banking sectors are actually cheap because of the CBN. But nevertheless, it does not mean that there's not going to be one problem there. But to be sincere, there has been sanity in the market compared to the past. When we chase the registrar up and down, we chase stockbroker up and down. Fintech is making stock market more interesting now. You can do your analysis from your smartphone in your house. So it's getting better than those days when we fill paper, we have to fill, we have to sign, we have to go with our signature. No, now it's getting better. And I think this is the best moment everybody should come in. And what people should know is that there are seasons when stock market will produce multimillionaires. And there are seasons where some people will lose fund. We're almost in that season now. Nigerian market is doing well. When the bull is there, let us not forget that there's always the bear market. So don't lose focus that it's sweet now. The bear market will always come, but we don't know when. So, but just play the game with a clear mind, with caution, and with all necessary principles required, so that even if anything happens, you can still mitigate the challenges. Thank you.
Interesting.
Thank you so much.
Interesting. And I love what you said about starting little by little and just building up from there. I think this is something that those of us who are in the market and have been growing step by step in the market. Let me just full disclosure. I still consider myself a newbie in the market. I'm still considering myself someone who just started in the market.
I hear you are solid now.
I still have to.
Me and you, we are solid now.
But I still, because when you consider this trend of starting little by little, you realize that it's only by looking backward that you see just how much you've learned and how much you've improved. But if you didn't start, you will not be where you were today. So I truly appreciate that.
Definitely.
And I think this is something that our investors, newbies, and our listeners should take as a very important part from this lesson, that this part about what's important lesson is for newbie investors, that you should definitely start small. You should start with, you can read, you can definitely read, but I mean, there's only so much foundation building that you can have before you can start building on that foundation, right? So it's good to build a foundation, but it's also good to build on that foundation. So it's always good to build on that foundation as well. So while we build a foundation, we should also build something on that foundation. And to do that, it's also good to start. So with that, I think we can go over to our next question.
Yeah, before we go over to our next question, I just have another quick question to ask Ogatayo. Now, my question is, in a bear market, because you said there is always a bull market and a bear market. During the bull market, everything is green and you tend to see a lot of people flocking. Everybody is happy. Everywhere is green. Then they shouldn't forget about the bear market. And in a bear market, there's always panic. There's always distrustfulness. There's always regret and all that. What would be your advice to new investors? Because I'm very particular about new investors because they are the ones that don't have the experience. So they might act in financial terms erratically. So what would be your advice to a new investor who has not experienced a bear market and all of a sudden the market is red? What would be your advice to them?
Yes. That is actually what I said, that in anything you want to do, have an understanding. Because it's not just the market that make money, it's the knowledge of the markets. Even in the bear market, there is still money to make. What every investor should have in the mind is that this is stock market. What guide the stock market? There are moments when there will be bullish trend. That's why what I've learned very much from most of the YouTube knowledge from Michael Burry's and co. There will always be a bullish trend and moment of bearish trend will come, but it does not last forever. The simple thing is that investors should have it at the back of their mind that make sure you don't overpay for any of the stock you are holding. At the bullish trend of the market, there is possibility of overpaying. When the market do correction, because there will be what we call market correction time to time, it is an opportunity for you to buy more at lower price and bring in what they call the dollar cost averaging. In Nigeria, I call it Naira cost averaging. Or probably you help yourself to stabilize at a good price. And no matter the bearish trend, it's not going to be there forever. If you have bought a tested and trusted company stock, dividend will come. Your dividend will come. The growth is still going to come. It's only the Mr. Market that is more or less being stupid about the stock, because Mr. Market can price a stock below the normal fair value. That's why I say, even if you don't understand the calculation, go for solid stock. If you have a solid stock, no matter how much the market bastardizes its price, it will still come back to its value. So that is why new investors should be careful, because there are these penny stocks that are not stable, that many new investors will flow and say, this one is growing faster quickly. No. Ensure that you have a balanced portfolio. Ensure you have tested and trusted stock that are solid, that at any point in time, take nothing less than 50% of your portfolio so that if the penny stocks are misbehaving, you have something to fall upon. You leave the penny stock. When they still come back to sell. It is very, very common for investor to act on the spur of the moment. Panic. They press the panic button. And that is one thing I've learned from many books written on behalf of Warren Buffett, either by his children, by his in-laws and co. That at a point in time, he does not press panic button. He look at it. Go back to what really attracts you to the stock. Did you do your due? If the valuation is still right, it will still come back to where it is. And what the management, because what is the management doing? The management are up and doing. Why are you panicking? And the management also have their money there. Why are you panicking? It will come back to where it belongs. So, new investors, for you not to have hypertension, go for tested stock. But one thing I want to say here is, any new investor coming to market, please and please and please understand your risk tolerance. That is one thing people neglect. Your risk tolerance. I can comfortably keep cool now. At a point in time, I was accumulating WAPCO, and people were telling me, this stock is not moving. I said, I have gone through the book. I know what I'm doing. I remember me and I, when I saw a little glimpse of hope in Ella Lake, I picked it when it was below 3 naira, and I knew what I was doing. So it is for me to look at. Right now, I just downloaded their financial report. I'm studying it. I've not finished, line by line, to look at what is happening. But for new investor, you don't know accounting, you don't know anything, go for tested company that you are sure of. People you can look at their management and say, okay, I'm following this management because they don't throw away money. And as gradually time comes, you begin to learn some nitty-gritty of the market. And then you might begin to stand on your foot comfortably well and take some better risk. Risk tolerance is important. Know that if price go down, will you panic? You're going to panic, go for stock that are stable. If you're not going to panic when price come down, good. You can go in for some of those speculative stocks and you will still get your result. That is just the way it is. So risk tolerance is one of the things every new investor should look into. Are you the one that you are scared once the valuation of your stock come down? Be careful. Are you the one that you are not bothered? As this price is going down, you are picking value. You are not bothered. You are good to go. So it is important that we always analyze our risk tolerance and beware of greed and fear. These two things, fear will send you away from the market. Greed will also put you in trouble. So these two things are very important. Thank you.
Thank you so much. Wonderful. Aye, what do you have to say?
I think it just flows back to what he has already said about taking it step by step. So you start with stocks that are more established, and that gives you a good feel of the market. You begin to understand your risk and reward tolerance because you're buying into companies that have that stability. And even before that, you've already asked yourself, what is the risk? What can I tolerate in the market, right? Some people are not very good with the volatility, a little bit of volatility, and they're already crying, what's going on? I mean, we see this all the time on the platform. Somebody's already asking, what's going on with this stock? It's down 10%. They don't realize that it's just a short term. It's just a short term thing. It's actually a good time to buy. It's a good time to buy this stock, right? The fact that it has gone down 10%.
To buy more, yes.
Yeah. So, yeah, what he has said is very, very good. And yeah, it's what young investors need to keep in mind, that starting small doesn't mean you rush and start buying the penny stocks. Some penny stocks will blow up one day and they'll become more established names. I think United Capital is a very good example of a stock that once upon a time was very, very cheap on the market. Today it's selling at 17, 18 naira per share. And that's because they've split their stock. I mean, they went as high as 30, I think 30 naira per 30 plus naira per share. So yeah, you don't have to rush and start looking for something that will make you get rich quick overnight. There are stocks that can deliver extraordinary value over time, over a short period of time in the market. We've seen this happen even this year alone. We've seen this happen. I think we've seen it with Julie. We've seen it with some stocks. You don't have to rush and start buying those stocks because, yeah.
Exactly. You can have your hold small, maybe about 5%, 6%.
Yeah.
But your mind is there in Presco where there's no fear.
There's no fear.
So
exactly.
When it blows, you can take profit and quickly do what you want to do. Or probably you stay there. That's it, sir.
Yeah. So completely agree.
One of the takeout from your last response is, will you panic if price goes down? That's the good question you should ask a new investor. Or as a new investor, that's the question you should ask yourself. Will I panic if the price starts going down? What would be my reaction? Will I just look at it and say, I will wait and see if we can weather the storm, or I'm going to cut my losses at this time so I don't lose more than this? That really plays into the psychic of people that invest in the stock market. Interesting. Moving on, sir. Aye, would you like to ask the next question so that
Yes. I
we'll
would
take
like
it
to,
from
because
there?
I think this is a very interesting place for a lot of young investors and for our listeners. And this is something that I think a lot of people might take this for granted, but it's something that you will notice for a lot of successful, let me use this word, successful investors. This is something that is the core foundation and the bedrock of that success. So, sir, I'd like to ask, are there any books or resources or tools that have significantly influenced your investing journey?
My brother, there are a lot of books. Actually, I happen to be a bookworm. I read a lot. But there are a few books, just only about 5. I think you cannot joke with that book called The Richest Man in Babylon. Richest Man in Babylon is one of the best story that you can look into and be able to understand the principle of developing yourself and taking care of yourself, and understand that whether you want to be rich or not, it lies in your hand. In fact, in that book, I came across that statement that said, of your growth lies in you yourself. If you believe you can, you can. If you believe you cannot, you cannot. If it didn't say you must put around 10%, if you cannot start with 10%, start with something. That is one great book. Another great book is The Rich Dad Poor Dad. That book is a fantastic book. And if you leave that, you can now begin to go into the fast lane to millionaire. Psychology of money. Psychology of money will even give you a better opening of the fear surrounding money, the greed surrounding money, the ability to be able to create a compromise between fear and greed. You need to do that for yourself. Every individual have a way of bringing that into perception before you play with your money. So psychology of money is there. There are many other books. Like I've read 7 Years, 7 Figures. I've read what I call the Cash Flow Quadrant, all the Rich Dad series, the Rich Man Conspiracy. Maxwell generally, there are books I read. Brand Tracy that just tells you, no, all I call it, eat that frog. Why are you afraid? Eat the frog. Don't procrastinate. Why are you procrastinating? Take a step. You might not take it in full step. Like people will say, don't put your 2 legs inside a muddy water. Put one leg first. See the depth. Measure the depth. If it is too deep, pull out your leg, and then gradually you begin to move on. So there are numerous books out there. One thing about books is that because I read books a lot, and I have advised many people to read books, a friend of mine told me that the exact book for individual, if the person come across numerous books, is book that's necessary for him, will attract him and make him to buy. Because if I'm telling you buy this, it is possible I have gone far ahead of you. But some basic foundation are Richest Man in Babylon, Rich Dad Poor Dad. There's a small book that was written by Sam Adeyemi, The Parable of the Dollars. One small book by Pastor Sam Adeyemi talking about, he just wrote it just like, all I call it, Richest Man in Babylon. These are there. There's one book also written by Tantan, which is all the secrets of the millionaire. One small book like that. Some of these books are powerful. There are not many books, but these are small ones that are not voluminous. And if you just take out the key points there, Gaskia, the person will do well.
All right, interesting. That's very interesting, sir. Thank you, sir. Following up with the question that I asked about the recommendation for books, do you have any mentor that you look up to, any leader that frame your investment perspective?
Talking about investment perspective now, actually, what I do is I look up to most of the biographers I have studied. I've not met them, I've only been fortunate to be reading their books. And I just try to pick key points and key steps that some of them have taken. So in terms of having somebody as if is a prototype or I follow, or a prototype I'm following, I wouldn't say I have exact prototype. The only thing I do is I take time to go into biographies. Any books I lay my hand on, if I can afford to, I just pick it up and I start reading. But the beautiful thing is this. I know that many investors have one thing or the other doing. And because they have one thing or the other doing, I will advise every investor coming in, if investment is not purely your business, endeavor to get this book called the 80-20 Principle. 80-20 Principle. There's one written for individuals, written by Robert Koch. And there's one written for general practice, for business people. 80-20 Principles just tells you that 20% of what you do give you 80% of your profit. So you'll be able to focus on the 20% of things that is important to you, that when you do, you get a multiplier effect of about 80% return. That book is a personal book that can change any individual in life. So that book, you can lay hand on that book, that's all. So I don't really have a particular mentor, a particular person. I just study what people are doing. I read biography and I've fashioned my own way of doing things. And then one thing I would say here, if I look spiritual, there's a book that I use. I'm reading and I'm reading and reading and reading over. It's written by Pastor Wale Oke, Alone with God. After reading all this book, I will stay alone on my own. I'll call it alone with myself and my mediator. So whatever I can draw for myself, I draw it for myself.
Interesting.
Very interesting.
Thank you so
very
much.
impactful.
Thank you very much for those recommendations.
Very, very thoughtful advice that you've given. And I think a lot of our listeners will gain a lot from just that wisdom pointed out there. And I like this. You've even said this already, that you might not have any specific mentor, but you do love biographies. And that already shows you that learning from others is always a very good way to just basically understand and master your steps. And I'm hoping that's very important. It's important. And I hope our listeners can glean a lot and learn a lot from that. Moving on, I'll just want to ask, so reflecting on the Nigerian stock market, how over the years, because you have considerable experience over 3 decades, is no joke. How have you seen the Nigerian stock market evolve over the last 30 years? I know you've mentioned, or you've already mentioned a little bit of this, that once upon a time in the market, it used to be very difficult. Shareholders will be chasing around their registrars and all the rest. But over the years, how has the stock market evolved over the past 30 years? Can you give us some insights?
We've come to the end of this episode. We hope to bring you the rest part of the interview in our subsequent episode next week. Thank you for listening to another episode of the favorite podcast that brings insight to the Nigerian stock market. We hope you enjoyed today's episode. To get more episodes like this, follow us on YouTube, Twitter, Facebook, Instagram, TikTok, Amazon Music, Apple Podcasts, Spotify Podcasts, as well as on our website. All this information is available in the show note below this episode. Until we bring you another episode your way next week. Bye for now. TNI Podcast is executive produced by Moody. This episode was edited by Rona at Rock Quarry Village Studio.